Over the past few years, most of the noise around XRP has been centred in the United States. Courtrooms, regulatory fights, exchange delistings, relistings, political debates, and endless speculation about what happens next. If you follow Western crypto media, you would think XRP's entire story has been defined by one lawsuit. But while that was happening, something else was quietly unfolding on the other side of the world. Japan wasn't debating XRP, Japan was integrating it. And this week, that difference became impossible to ignore. SBI Holdings, one of Japan's largest financial conglomerates, launched roughly $64 million worth of blockchain-based security token bonds that reward investors in XRP. Not a pilot project, not a startup experiment, a regulated fixed income bond product. Issued on-chain, embedded inside Japan's capital markets infrastructure. So today I want to explore a question that sounds provocative but deserves a calm, grounded answer. Does Japan understand something about XRP that the West still doesn't? Or is Japan just simply further along in building while everyone else has been arguing? If you're new here, my name's Paula. On this channel, we zoom out. We connect macro trends, liquidity cycles, regulation, geopolitics, and infrastructure so that you're not just reacting emotionally to candles on a chart. The goal isn't hype, it's clarity. Because when you understand structure, volatility becomes information instead of fear. Now, let's start with the facts. SBI Holdings has issued a 3-year bond product with an annual interest range of approximately 1.85 to 2.45%. The bonds are digitally registered and managed on blockchain infrastructure. They are retail eligible. They are regulated. And investors receive XRP rewards tied to their subscription amounts, distributed across scheduled interest payment dates and at maturity. This is not speculative DeFi yield farming. This is regulated capital markets activity. And the scale is not trivial. SBI is a financial powerhouse in Japan. It operates across banking, securities, insurance, asset management, and venture investment. When an institution like that integrates XRP into a bond structure, it signals institutional comfort, not hype, not experimentation, comfort. But this didn't come out of nowhere. The relationship between SBI and Ripple dates back to 2016. When they formed SBI Ripple Asia, the objective wasn't to pump a token. It was to build cross-border payment corridors across Japanese and Asian banks. Over time, dozens of Japanese financial institutions became connected through Ripple-based infrastructure. Japan's Financial Services Agency classified XRP as a crypto asset early on, providing regulatory clarity that the United States lacked for years. That clarity matters more than people realise. When institutions know what something is, they can build around it. When they don't, they hesitate. While the United States was locked in litigation with the SEC, Japan had already moved forward. That divergence has now compounded into a visible infrastructure gap. And this is where the story becomes bigger than just XRP. Because Japan is not integrating XRP into meme coins or speculative retail apps. They're embedding it into capital markets products. Tokenised bonds represent a shift in how securities can be issued, settled, and managed. Traditional bond issuance involves layers of intermediaries, administrative processes, and settlement delays. On-chain registration reduces friction. Digital issuance lowers overhead. Settlement can be streamlined. If you're in a country with an ageing population, high government debt, and a need to modernise capital markets, tokenisation becomes pragmatic, not ideological. Japan's macro environment makes this even more logical. The country has one of the highest debt to GDP ratios in the developed world. Its population is ageing rapidly, which places structural pressure on savings, pensions, and fixed income markets, encouraging retail participation in regulated bond products while modernising settlement infrastructure aligns with long-term financial stability goals. Adding XRP rewards to a bond product may seem like a marketing twist, but it also serves another purpose. It bridges traditional finance with digital asset familiarity. Younger investors who are comfortable with crypto may now see fixed income instruments as more accessible. It's a psychological bridge between two financial worlds, and that's where the Western narrative diverges sharply. In the United States, XRP has often been framed through the lens of legal uncertainty. For years, the conversation centred on whether it was a security, whether exchanges would list it, and whether regulatory action would suppress its growth. That framing shapes perception. In Japan, the framing has been infrastructure and settlement. Different framing leads to different outcomes. Now let's widen the lens even further. This week, alongside the SBI story, we saw reports that Deutsche Bank is tapping Ripple technology to modernise cross-border payments and settlement systems. Europe is exploring blockchain infrastructure integration at the institutional level. Meanwhile, global asset managers are experimenting with tokenised funds, on-chain treasury products, and digital securities issuance. The tokenisation of real-world assets is no longer theoretical. It is progressing quietly inside traditional finance. Japan integrating XRP-linked bonds fits within that broader structural shift. It's not an isolated event. It's part of a larger capital markets transformation. And this is where I want to pause and address something important. Infrastructure adoption does not automatically equal immediate price appreciation. Markets can ignore structural developments for long periods, but infrastructure has a different life cycle than speculation. Speculation spikes and fades. Infrastructure builds slowly and persists. If XRP becomes embedded inside settlement systems and tokenised security frameworks, its relevance shifts from narrative-driven to usage-driven, and that distinction is critical. Now let's talk about ownership and adoption within Japan more specifically. Historically, XRP has consistently ranked among the most traded crypto assets on Japanese exchanges. SBI's exchange arm, SBI VC Trade, has heavily supported XRP pairs. Retail familiarity is high. Media coverage within Japan has often been constructive. Over time, this created a feedback loop of acceptance and integration. However, there is no public evidence that the Japanese government holds XRP as a strategic reserve. The story is not about government stockpiling. It's about ecosystem embedding. Financial institutions, exchanges, and capital market structures incorporating XRP as a functional layer. That's a very different thesis from Japan is secretly hoarding XRP. The more grounded interpretation is that Japan had clarity early and therefore integrated early. Now, I want to connect this to something else that's been developing in the background. Recently, Bitcoin broke a 12-year valuation trend relative to gold, prompting analysts like Willy Woo to discuss potential structural shifts in narrative, including distant concerns around quantum computing vulnerabilities affecting long-dormant wallets. Whether or not those concerns materialise is secondary. The point is narrative fragility. Bitcoin's dominance narrative has been digital gold, a store of hedge value. XRP's dominant narrative in Japan has been settlement infrastructure. Those are different archetypes. In a world where tokenisation accelerates, where cross-border settlement efficiency becomes more valuable, and where capital markets modernise through blockchain rails, infrastructure assets may find structural demand independent of store of value cycles. Japan's positioning appears aligned with that infrastructure thesis. Now let's pivot slightly because I know many of you watching are traders as well as long-term holders. We've been in a volatile environment. Liquidity has been uneven. Sentiment has swung rapidly. If you're holding spot only, you may feel stuck when markets move sideways or down. But volatility itself creates opportunities for those who understand structure. This is where Blowfin fits naturally into the conversation. Blowfin is the exchange I use to trade. It's a derivatives exchange with strong liquidity and risk management tools, allowing traders to capitalise on both upward and downward movements. In markets like this, being able to hedge or take short positions responsibly can completely change your experience of volatility. I've reached out to Blowfin and they've launched a new community campaign specifically for my audience here. And you'll find the details linked below. If you are trading, do it with discipline. If you are investing long term, understand the structural thesis you're buying into. Those are different strategies requiring different mindsets. This is also the reason why we set up the Crypto Wolfpack. Retail traders often feel isolated, reacting to headlines without context. Inside the Crypto Wolfpack, we analyse macro shifts, liquidity flows, regulatory developments, and infrastructure adoption together. We read charts, we discuss geopolitics, we connect dots. Because infrastructure stories like this one rarely impact price overnight, but they shape long-term positioning. So if you want to know the exact strategies we use to make money in both the bull market and the bear market, we've made a completely free course for you. The link is in the description below. Now, before we wrap this up, let's address custody. If infrastructure integration deepens and tokenised assets expand, self-custody becomes increasingly important. Exchanges offer liquidity and trading. Long-term holdings should be protected. That's why I partner with Tangem. It's a simple, card-based cold storage solution that removes technical friction while maintaining security. If you're holding XRP or any other digital asset long-term, consider how you're storing it. You can use code Paula at checkout for an extra 10% off any other discounts that are on their website. So let's return to the original question. Does Japan know something about XRP that we don't? Probably not in a conspiratorial sense. They don't have secret price targets. They don't have insider knowledge of a future valuation event. What they have is regulatory certainty and institutional alignment that allowed them to integrate earlier than others. While Western markets debate classification, Japan built infrastructure. And infrastructure tends to outlast debate. The more relevant question is not whether Japan knows something. It's whether the other major economies will follow their model. If tokenised bonds scale successfully in Japan, if European banks deepen integration, if cross-border settlement rails expand across Asia and beyond, then XRP's role shifts from speculative asset to embedded financial layer. That shift would not be explosive. It would be gradual, but gradual structural integration can ultimately be more powerful than hype-driven spikes. Markets reward builders eventually. Not always immediately, but eventually. Let me know your thoughts in the comments. Is Japan simply early, or are we underestimating what infrastructure adoption really means? If you found this valuable, hit like, subscribe, and share this with someone who still thinks XRP's story begins and ends with a lawsuit. Thank you so much for watching, and I'll see you in the next one.